Chief Investment Strategist at Piper Sandler. Michael, welcome. Give me your best ideas.
Hi. Good afternoon.
Yeah.
Good afternoon. So the tech sector has obviously done great, but very few investment managers can only own the tech sector, even if it is the best performing area. So we've been focused on really the last couple of years, as tech has been leading, trying to highlight stocks outside of the tech sector or in addition to the tech sector that have similar attributes, that are somewhat part of the family of companies that are growing earnings, that have high profitability, strong balance sheets. That's really, in our opinion, been the recipe for outperformance, not only within tech, but beyond that sector and across the market, even down to small caps, I would argue.
Now, I want to take a pause and talk about tech for a moment, because I wonder if the idea of tech as an umbrella group is sort of outliving its usefulness, because software, which people think of when they think about technology, a lot of software, especially beneath the surface of the very biggest names, has not been performing well lately at all. So are there more discrepancies between how different groups, software, semis, different sizes of companies within these groups are performing nowadays?
Yeah, you're going to see that within most sectors. I think the back and forth between hardware and software. Geez, I remember that going back all the way to 2000, and so it's obviously a big part of the AI story now, and how much of the software sector is going to be disrupted. But in general, the last couple of years, it's been fairly broad. And so the tech sector offers many ways to find out performance. But again, within financials, industrials, even the discretionary sector, there are many other names that have, among their own peers, the best earnings growth and profitability, which is really what the Mag 7 are within commercial services or communication services and tech, that have also added out performance. In fact, if you've bought the more profitable names within each of the 11 sectors as a broad basket, you've actually done better than the tech sector of the last couple of years. And that's our point, is to find diversification instead of just owning 7 stocks, but along those same types of strong attributes.
So in that same way, do we tend to find relative mega caps within these other groups as well? Is that part of what the impact of their outperformance has been?
Yeah, well, its size is, somewhat a result of the strong fundamentals, really going back to GFC. And, in today's macro backdrop, where interest rates are still somewhat elevated, yeah, sure, they're going to come down a little bit. Prices are still very high, and inflation is low, but not really declining. You're continuing to see a strong outperformance of companies that have scale, whether it's better access to capital, better ability to manage their labor costs or their other input costs. And I know recently, in the last few days particularly, there's been a pretty strong outperformance of small caps, which I think has all to do with the macro story, with the market pricing in 100% odds, even more than that, of a cut in September, and then another one in one of the last 2 meetings. And with the passage of the big, beautiful bill, you're seeing a pretty broad-based increase in earnings expectations. But what's notable about small caps is their sales estimates are still falling. So that makes me believe that it's not really this broad macro pickup, but more of a kind of a one-time benefit from the benefits of the pro-cyclical policies in the new bill.